Hi, everyone. Jason Sherman here. In today's episode of Zero CEO, I speak to real estate investor, CPA, and founder of Harvard Grace Capital, Stewart Heath. Welcome to the show.
Hey, thanks for having me, Jason. I really appreciate it.
No problem. And we're going to be talking about how to build your wealth with passive real estate investing, which is a pretty hot topic. I mean, the pandemic really, a couple of years ago, really kind of ran a number on the real estate market. I noticed everybody was either moving, trying to figure out where they were going to go to, selling their homes for a lot of money, or afraid to sell their homes for a lot of money because the mortgage rates were so high. And things seem to be leveling out now. Finally, people are starting to finally be able to buy homes again. But outside of that, if you already have a home, something that's really powerful is investing in secondary and tertiary properties that you can then rent out to people. When was the first time you noticed that that was something that you wanted to be involved with?
Well, really about year 2000. It's a kind of a fun story. So I'm a CPA. I was in the middle of tax season. It's like 2:00 in the morning. And
crunching numbers with that coffee next to you.
Yeah, I used to say I worked two shifts, 9 to 5 and then 9 to 2. And and I'm sitting there and I'm doing this and I'm billing a lot of money. I'm making good money, but I realized I wasn't really building any wealth. And a whole bunch of my clients were in the real estate business of various phases of it. And I sort of realized that, I'm missing something here. They're not paying any taxes, and I know because I'm doing their returns. And so then I started, looking into it. And December 2001, I bought my first duplex.
Oh, nice.
And very shortly, I ramped it up very quickly and ended up with a whole bunch of residential rentals and got into property management and the whole bit. So, the tax benefits are really unique only to real estate investing. You can get cash flowing opportunities in several different places, but you won't get the tax sheltering that you get with real estate. So that's when I first started. So
yeah, I mean, you have mortgage, taxes, you have repairs, insurance, property tax. I mean, there's so many different things that you have to
depreciation.
Yeah, so many things that you have to account for. Now, this is really popular on social networks. Like people are talking about, oh, you can get into real estate investing and get out of the rat race. But there's a lot of challenges that go along with it. So when you first started out with your duplex and then a couple, other real estate properties, what were some of the challenges or maybe even mistakes that you found that maybe people could avoid?
I've literally written a book on my mistakes.
Of course you have.
But when you're getting into, especially residential rental, one, you make your money on the buy, not the sell. You can't overpay for a property and ever really make any money on it. But when it comes to residential renting, the most important rule is tenant selection. You must select the right tenant. And somehow the wrong tenants always seem to gravitate to new landlords. There's no amount of due diligence that's too much. Don't hesitate to ask them for the application fee of anywhere from $50 to $75 and spend every dime of that on a report that you can get on those people. Some people think, well, there's nothing more expensive than an empty property. That's not true. There's nothing more expensive than the wrong person in your property and they're in there tearing it up.
And not paying on time.
And not paying on top of that.
Or at all for God knows how many months.
Yeah, I mean, in my first couple of years, I bet there was a dozen people where the only money I ever got was the money I got when they moved in. And a month later, I'm trying to move them out. And depending on what city you're in, that's either easy or hard.
Yeah. In the landlord-tenant laws changed a lot during the pandemic as well because people were losing their jobs and they couldn't pay rent. And then there were protections in place from the city saying, well, no, you can't evict them.
Right.
We'll help them pay their rent by giving you the money. But then there was a lot of time lost and money lost for a year, 2 years or longer. So
Yeah.
it's not as glamorous as people make it out to be. There's definitely a lot of challenges.
Yeah.
So when you decided to get into this and you had to possibly manage people, you talked about property management,
Yeah.
and of course with your company in general, this means that you're in a leadership role. And how was the transition from CPA to leadership role? What was the difference there, and what was that like?
Rough.
That's an easy way to say it.
Yeah.
What was so rough about it?
Well, I'm kind of a control freak to begin with. And as a small entrepreneur, I'm just kind of used to doing everything, and I and so I figure out how to go do a job, and then I want to hire somebody to go do it exactly the way that I did it. And then it's just hard. Management is something that is taught, it's learned. It is a skill that can be acquired, but I learned it the hard way. And it's not just enough to hire great people. That is the first step. But you got to let them do their work in hiring great people. Um,
Yeah,
you know,
I notice that sometimes you hire people who may even do things better than you do. Uh,
Absolutely. I hope so. Yeah.
yeah, not
I just did
often.
that recently. I hired a new accountant, and praise the Lord, she's better than I am.
That's great. That's great to hear, because that's typically not how it is. And,
Yeah.
that goes back to thinking about when you first start out, you need some sort of mentorship, someone to kind of guide you along and help you. And did you have anybody like that to help you either as a CPA or as a real estate investor? Was there anyone there to help you along?
I had a few people who helped me get into the game, not as much to run the company, and probably I just didn't make enough time and seek those people out because I was too busy doing all the jobs.
Do you
Uh,
recommend somebody to do that though? Do you recommend someone to try to find others to help them get
I
into?
do, I do.
How would that go? How would that work?
How they fund them is probably still a bit of a mystery to me. But something that I've only been doing the last few years is getting involved in different networks or groups. Some people call them masterminds. And there's a lot of knowledge to be gained there. Like I joined one to raise capital, to learn how to raise capital because I'm a CPA. I'm not a marketer, but I've become a marketer. And so a lot of the learning and the courses, I consumed that in the first year, but the other 4 years I've been in this, it's all about the network.
Okay.
The people that I've worked with all over the country, and we do learn from each other. And the longer you're in those groups, that's typically where the learning is learning from each other. I had this problem, here's how I solved it, and things of that nature. So really get involved in those kind of groups. There's a billion of them. So you probably need to try some on before you find the one that's right for you.
Right. So like
They're not all worth the money.
so
So
just explore them and see which one works
yes,
for your style or what your
yes,
methodologies are. Now
correct.
you are a CPA,
I am.
and you're a numbers guy. So a lot of people hear about, oh, if I get, real estate, if I get properties, I'm going to have cash flow coming in. But if I buy a house, fix it, flip it, then there's capital gains possibly going there, which is a big cut of expense, taxes and whatnot. So can you explain the differences between cash flow and capital gains to people, and,
Sure.
and explain which
Yeah.
ones are better than others, or maybe, what your advice is?
Yeah. First, I'd take a step back and say there is a difference between trading and investing. And the fix and flip guys, and I tried that once, nothing wrong with it, but they're more what I call traders. They're sort of akin to a day trader, and you're tracking certain movements in a market. Because if you get long-term capital gains on your fix and flip, something's wrong. The market's wrong, or you were just too slow. And fixing and flipping, you got to be able to move fast. And so. And so it's a good way to make money. As I said, I've done it before, took way too much of my time. But you buy it for this price, you put more money into it to fix it up and bring it up to like new standards, and then you sell it at the then market. And if you've owned it for less than 12 months, that is a short-term capital gain, and you will pay ordinary income tax rates, the same rate you pay on your salary.
Yeah.
Whereas if you're buying a rental and you're going to hold it for 3 or 4 years, you're going to take depreciation on that for the first, for the life that you hold it. Maybe you've fix it up some, maybe you have to replace an air conditioner, and those are things that go into your cost basis as well. And usually you can write most of that off in the year that you pay for it. And then and then after 5 years, after 10 years, you sell it for 10 times what you paid for it. Because you've held it for more than a year, that's a long-term capital gain where you've got much lower income tax rates on that, and you pay a lot less tax on that. So not only have you gotten all of that tax depreciation all these years that have helped to shelter the income, the cash that you've pulled out of it from taxes, then you pay a lower tax rate when you sell it, which is truly investing, which is doing something over time to me. That's just sort of
Right. And
my definition.
And you mentioned all the tax, protections and whatnot. So really quick, what other tax advantages do you get from investing in a long-term strategy? What are the advantages to that for your taxes overall?
Well, you touched on some of them, but the three major ones for investing in real estate long term are the depreciation. And we just had a tax act where they re-upped, they brought back 100% bonus depreciation, and so a portion of your purchase could be reclassified as personal property and then subject to bonus depreciation. Nice. So there's that, and that's a non-cash deduction that you get to offset your income with. You've already mentioned that you get to write off 100% of your interest expense that you if you financed a portion of the real estate. Right. I suggest that you do at least finance a portion of it. Real estate's the most easily leveraged asset class in the world. So anything that you do to manage that, if you can track your mileage from your home to this property and write that off, as long as it's related to managing that property, you can write off your tax prep fees because you've hired a CPA to do your return because you're now a real estate investor and you need somebody who's familiar with those type of things. So you really have created a small business, if you would, and anything that relates to that business. Maybe you go take a real estate course or something, and you had travel and a fee for the course that becomes deductible. Above the line, as we call it. It's no longer an itemized deduction. It's a charge against the income of the asset.
There's a ton of expenses you can write off for sure. I mean, we can probably have a whole episode just on that alone. Which we can't because we're running out of time. So let's give you one last thing here to kind of impart on people before we talk about your company. If you had to give advice to people, because someone's going to listen to this and say, well, I want to invest in real estate, but I just don't know exactly where I should start. What advice would you give to them if they want to get started? They have a job, they have a salary, they want to offset their taxes, but they also want to create generational wealth. What advice do you give to them?
One, start. It can be something you want to do, but if you don't ever start investigating it and finding someone that you trust enough to invest with, you're just going to be sitting on your couch. So, like everything, take action. If you've got a full-time job, you're not going to replace your income with one piece of property, likely. And you shouldn't put all your eggs in one basket anyway. So start investigating passive private placement deals, as they're called. You may or may not be an accredited investor. There is a private placement deal that can handle both. Some of them require everybody to be accredited. Some of them will allow non-accredited people, but they'll have entry points anywhere from $10,000 to $100,000. So get to know the sponsor, um, get to the point where you trust them enough with your money, and then take the plunge.
Nice.
It shouldn't be all the money that you have. It should be a portion of your investable cash flow, and then see how that works for you. You'll get a tax report usually in the first quarter of the year called a K-1 that'll flow back to your return, and depending on the type of, if you do like what we do, ours start paying cash flow immediately. We don't generally do fix and flips or value adds, and so we only do stabilized cash flowing deals. But
Perfect.
the best advice is get started.
Get started. Guys, get started with Stewart. And where could they find out more about you and your company if they want to maybe talk to you or work with you?
The best place is harvardgracecapital.com. Here's the name right there. And there you can find my Calendly link. I will talk to anybody about real estate anytime. So I do offer everybody to reach out, make a phone call, send me an email, whatever you want to do. We'll talk about real estate and what your ideas are in your market. And the only cost is that you have to listen to me talk about my real estate.
That's nothing wrong with that. Fantastic, Stewart. If you guys want to build some generational wealth and invest in real estate, contact Stewart, harvardgracecapital.com. Hope you guys enjoyed the episode, and we'll see you guys in the next one.